Hello and welcome back to Core Finance. I'm Matt Brown. I'm joined by Mike van Dulken, Head of Research at Accendo Markets, stepping up to the plate and joining us for the morning show here at Core Finance. So thank you very much for coming in today, Mike. Let's have a look at what's moving the markets and have a quick chat about what's going on. Now, we've seen a sell-off in Asia, certainly tech stocks, overnight. Is that something investors should be A, aware of and B, worried about?
I think, yes, to be aware of it. It's an extension of what we've seen in the US recently, which has been dubbed a rotation from stocks that have done incredibly well on hopes of tax reform in the US. And then some skepticism about actually will some of those names be huge beneficiaries. So some profit taking, running for the exit. Tech is an extremely worldwide sector, so kind of understandable there. We did see a bit more weakness in Japan overnight, and indeed China, but essentially an extension of that. Maybe some jitters about China. I think we'll look a bit later on. There's a copper chart. It's normally a very good barometer for sentiment on Chinese growth. But yeah, I think this is normal rotation. Thankfully, as we get closer to what is the potential tax reform in the US, it's been a long time coming. So it's both good news and bad news.
So I mean, as well with rotation, it's not a clear sell-off. It's fund managers saying, getting their house in order. We're coming towards the end of the year.
Window dressing, yeah. Exactly.
Yeah, window dressing. We make some good profits on this. Maybe the banking sector has underperformed or hasn't performed as well as it could. Yeah. They're a net beneficiary of tax reforms and certainly interest rate hikes looking into 2018. So rotation does happen as it happens with private investors. Will take profits and move it around and not necessarily move into cash. So as a red flag for the markets, albeit markets generally have had a stellar year, it's not a necessarily a bearish signal at this stage.
No, I think, as you say, rotation is a natural phenomenon. This is the excuse, I guess, people have been looking for that rotation. As you say, not necessarily moving into cash because there's a big, fear of missing out. Having seen the rally, is it over? If it keeps going, it's been more risky to not be on board than it has to be, than it has almost to be trying to, call the tops along the way. It's been a, huge rise, and if this tax reform doesn't give the markets a fresh wind, to be out of that and in cash is going to prove costly.
And moving on to the UK markets now, I think it took everyone by a little bit by surprise. You're looking at Hammerson and INTU, tied up there, all share deal. Great little bit of M&A in the property sector that possibly some didn't expect. Just talk us through that. Is that a good sign, or is it that a case that consolidation needs to take place in the UK property sector?
I think it's part of natural consolidation. Hammerson will have seen some value in the tie-up. If anything, as you say, it's taken us a bit by surprise, but it's certainly a vote of confidence in the UK, despite a backdrop of Brexit uncertainty, but it's also a vote of confidence towards the UK consumer. Don't forget, it's not just property, it's retail property. And you don't go gung-ho into making a bigger group if you're not confident that the footfall is going to stay high and that you're going to be able to, get the rents in and keep the values high. So it's interesting to see. We had some broker upgrades also by Credit Suisse on the FTSE 250 sector. We've also had Shaftesbury raising some money for its own acquisition. So, the sector can often go days, weeks, months without much news. It's been full on this morning.
Exciting times. And speaking of property, and more in the commercial property sector as well, British land, FTSE One to watch. If we have a look at the chart, it's doing quite well there from mid-November.
So we'd already had a breakout, and today's news has taken it above 645. My view there is, and actually there's a pattern there in the middle which I haven't highlighted, which is a bullish flag pattern, which may have completed itself. But if we take the view that Theresa May is able to get something more concrete and positive from her negotiations with Brussels by the end of the week or by mid-month, what we've seen is the more clarity seems to be helping stocks like these. So that might be what is necessary to give it a second leg higher towards the highs of May, which is 4.5–5% upside. That's not to be sneezed at.
And moving on to another FTSE stock, BP. We had obviously an OPEC meeting last week, extending the production cuts or extending the lifespan of the production cuts next year. Both BP and Shell actually are two stocks that I've been following this year with the rise in oil price. The oil majors are net beneficiaries of that. Has this price moved to the upside, though, run out of steam? What are the technical charts saying?
Well, we can see already so BP shares are, what I say, well off their highs. You know, the range of the chart is not actually huge in itself. We're off the highs. The OPEC and OPEC is been and gone now.
Yep.
Nothing for another few months. Interestingly, we had US oil inventories last night. We had a drawdown in crude. We had a big build in gasoline, which is normally creates jitters in the market, but oil didn't actually move too much. But what I'm concerned about here is we're toying with an intersecting trend line that goes all the way back to mid-January, which, if breached around, call it 490, 485, probably where you want to get worried, it could trigger what's called a bearish head and shoulders top reversal that takes us all the way back towards the lows of this year. Don't forget, oil is still pretty much range bound. We get good news about, you know, OPEC extending the cuts, but it's just extending the cuts. It's not extending. We still need to look at curbing exports, actually curbing production as well. So until we get really anything major that helps oil, you know, decidedly above $60 into maybe a 60-70 range, you know, the upside to these oil majors may be limited. Indeed, if we fall, you know, back towards the 45-55 range, you know, that could be what sends the shares lower. So it's one to watch, and don't forget it's a huge weighting on the FTSE along with Shell, 14.5% this morning. You know, any big moves by them has a big knock on for the index.
And something else that has an impact on BP and Shell and the index, the FTSE itself, is the pound and the pound performance.
Yep.
So we've got sterling against dollar below the 134 handle, euro sterling around 88.34. Theresa May, is she going to Brussels? Is she not? Has she got a Eurostar ticket? Is she going to be at Prime Minister's question time today?
Yeah, we don't know yet.
What's going on, and how do you feel, and what's the feel from investors with regards to Brexit negotiations, and how's that having an impact on A, sentiment, and B, the markets and the pound?
Well, first of all, the pound, certainly sterling dollar, seems to welcome any clarity. And we have a bit of a rally, hence why we touched 135 very recently, which in turn is a negative for the FTSE. You know, the stronger pound is a negative because it reduces the value of what the foreign earnings, the value of the dividends in dollars. So there's that kind of perverse relationship. We get good news on Brexit, FTSE goes down. We get bad news on Brexit, as we've seen, the pound comes lower, the FTSE's up a bit. So there's a trade-off there. So there are indeed investable opportunities and trading opportunities, but it's about being on the right side and digesting it kind of the opposite way to Brexit. But indeed, her diary has been cleared from what we're led to believe. Not sure whether she'll be at PMQs for a second week running. Don't forget she was in Jordan last week. But if she is there, expect some fierce questioning from both sides of the House about what went seriously wrong beginning of this week. How can you go to Brussels and lay all your cards out and then find that someone else has just swiped one? You know, not dealing with your confidence and supply partners is a huge faux pas along the way, in my view.
Theresa May, a lot to answer for if she is at PMQs today. Now, we mentioned at the top of the show copper, Dr. Copper, as it's sometimes known, and this is a key indicator of generally the Chinese economy and how the economy is going, and that has certainly a knock-on effect for the global economy. So just talk us through what it means, A, for China and potentially the FTSE when we've got a lot of miners based in it.
So copper is viewed as an economic barometer given its widespread use in pretty much all the technological gadgets we have, and indeed, you know, China being a huge kind of an epicenter almost of both demand and indeed manufacturing for that around the world in Asia. So what's interesting here is it's a pretty sharp sell-off over the last few days. We can see there potential what was a bearish flag, which may have completed, but the worry is it preparing for a second leg lower, which could breach the lows of September, which would also breach the rise in support going all the way back to May, so it could give rise to a more meaningful move. The knock-on for the FTSE, you've got the likes of Rio, Antofagasta, Glencore, Vedanta. They're all very copper sensitive. and if we do get a big breach for copper, they will probably suffer, likely bringing the FTSE lower in turn. I believe the last couple of days you've seen the miners at the tail end of the FTSE, kind of the architects were part of its weakness. So if the copper extends its falls, the FTSE could remain under pressure.
And one for the viewers, if you're not trading copper directly, it is a key indicator on what could happen in other markets. And speaking of what's going on in other markets, well, let's have a look at the economic calendar for today. We've got the ADP employment change number, a precursor generally for non-farm, so look out for that. And the Bank of Canada rate decision expected to be unchanged, but look out for that if you trade the Canadian dollar. Anything else? Have we got oil inventories, I believe?
We've got oil inventories this afternoon. API last night was a bit confusing, a big build in gasoline, which the markets normally take negatively as reduced demand from the US. Don't forget, we're still coming out from the storm-related interruptions at the end of September, so there may well be explanations for that. But as I said, overnight oil didn't react as much as we might expect, hence the relative stability for the oil majors themselves. So it may be another non-event, but I think it was 9.5 million barrel rise, which is the kind of figure we don't see that often. So anything similar to that, the markets may well take it on the chin. They may well decide to react negatively, as the EIA is the official data from the US. The API is, as always, estimates.
Understood. Well, on that note, Mike van Dulken, thank you very much for joining us on the morning show here at Core Finance.